Welcome to today's show. Tucson Lux Living features exceptional products and services for the area's top consumers, bringing together high-end real estate, business, money, and lifestyle. I'm your host, Alicia Kramer, realtor and owner of Tucson Lux Living Publications. Today we have with us Jonathan Spurr. He's the owner of Inspired Life Mortgage, and we are going to get right into it with a pretty good topic. So before we get into that, I just want to welcome you to the show, Jonathan.
Thank you for having me. I appreciate it.
All right. So this is our main objective for today's episode, is really to clarify for people what is the difference between a mortgage banker and a mortgage broker. So we know that there's a lot of misunderstanding around that. Even as a professional real estate agent, I see it with others in the industry. So if the agent can't lead the client to a clear understanding, then how in the world is the client going to know what the difference is? So can you please shed some light on this topic for us?
Absolutely. Going back 2008, 9, 10, even previous to that, there was a significant difference between a mortgage broker and a mortgage banker, to where it made a big difference on who you chose and who you went to. Fast forwarding to 2020, 2021, in the age of technology, the differences are very small and minute. In a lot of cases, a mortgage broker is the better value than a mortgage banker. The misconception today, and this comes from 2004, 5, 6, 7, 8, that the mortgage broker has an in-house underwriter sitting right next to, mortgage banker has an in-house underwriter sitting right next to them. They can run the papers over and get things signed off right away. And that just is not the case. Mortgages evolved to where that model is not cost effective for a banker. They have all of their underwriters centralized, all of their closers are centralized, or they're working from home. So the day of being able to go and get documents signed off immediately at a mortgage banker's office just isn't the case. We as brokers and bankers function the same way. We have to submit our documents electronically, and they go into a holding pattern until whenever that person has a chance to look at them. Another significant difference is bankers are confined to their box of their business. Whoever they work for, they have the option of these underwriting guidelines. And if you don't fit the box, you don't get approved. Mortgage brokers have access to hundreds of lenders across the country. And if ABC lender won't do your loan, maybe XYZ will. And so it gives us the ability to shop that mortgage around for somebody that'll get the transaction done if there's something quirky about it. But it also gives us a chance to look at great products, great rates, great fees, and closing costs. I think the one thing that most people don't understand is after 2010, when Dodd-Frank legislation went into place, the heavy regulation only affected mortgage brokers. We can't charge an origination. We can't charge discount points. We can't charge processing fees, doc prep, all of these garbage charges that other lenders are able to do that are on the banker side. We can't. I can charge you for an appraisal, credit report. If there's a cost to buy the rate down at the lender, that's it. That is all we're allowed to charge. So by regulation, by federal regulation, it makes brokers in most cases I don't want to say cheaper, but a better value to the consumer.
So let's elaborate on that a little bit. Now, from a consumer's perspective, when I am having my credit checked and I'm going through the pre-approval process to get a mortgage, what is my experience going to be with a mortgage broker that is different from going with a mortgage banker? So you alluded to the fees and how you're not able to charge all of those extra fees that do add up when you get to the closing table. So just give us kind of an overview of what that looks like.
As far as the application process, is that what you're asking?
No, not necessarily the application process, but the fees. So if I come to you, a mortgage broker, how are you potentially going to save me money? So I just want to clarify it a little bit for people who maybe didn't quite catch the distinction there between how the mortgage brokers are not charging all of those extra fees, whereas if you go to a mortgage banker, you might be seeing some of that extra stuff.
If I have borrowers send me their loan estimates from multiple places when they're trying to shop for a mortgage. What I typically see on the mortgage banker side is there is some sort of origination fee, 0.5%, 1% of the loan amount. Put that in context. If it's a $200,000 loan, you're looking at $1,000 to $2,000 charge. That's just something that brokers are not allowed to do. They can't charge that. They cannot make money on origination. I typically see a processing fee somewhere between $500 to $750. As a broker, we're not going to have that fee because we're not allowed to charge it. I typically see a doc prep fee of about $150, and then there's some sort of other miscellaneous charge of $75 to $100. Again, those miscellaneous charges we wouldn't have either, just because the Dodd-Frank legislation says we can't.
So then somebody is going to be asking this question in their mind: how do you make any money?
We get paid by the lender we send the transaction to after the loan closes. We're not allowed to collect any money from you up front. I can't even collect the appraisal fee from you up front. And once the transaction is closed and funded, we get paid within 24 hours from whichever lender we helped facilitate the transaction.
Okay. And I just had to include that piece because you know, on a practical level, somebody's got to be asking it. And I remember when I was going through one of my home buying processes, speaking with different lenders, and, you know, I was doing my due diligence and checking all of my options and making sure that I had the best rate. And that was the first time that it was ever explained to me that the reason we can give you a great price, so to speak, or, you know, what you said, right? Bringing value. How we can bring more value to you is we get paid by the bank. We get paid by the lender, not by you. So I think that that is something that oftentimes is overlooked and not entirely understood.
And what a lot of people don't understand is the majority of the mortgage bankers out there, unless you're dealing with the big five national banks, Wells Fargo, Chase, those guys are considered an end user of that mortgage transaction. But most mortgage banks are also getting paid, call it backside, when they sell your loan to whoever the servicer is. And they're getting paid roughly what I would, in many cases more than what a broker would, plus that origination on the front. So it's the ability for them to make more money on the front end of the transaction and continue to make the same money or more on the back end of the transaction when they sell it. So they're also getting paid, but they don't have to disclose it and they don't have to say where they're getting it from. Whereas a broker, I have to disclose to you, I'm making X on your loan every time. And the banker doesn't have that restriction on them to tell you how much money they're making on your transaction.
Got it.
We're also limited by Dodd-Frank. We have maximum percentages that we can make per transaction, and total fees can exceed X percentage. Those restrictions aren't on the banker side either.
Got it. Okay. And certainly, if you've got a good lender and you're happy with your lender, fantastic. But knowledge is power. And for anyone who is not married to their existing loan officer, it's good to know these things, because then you can make some maybe more empowered choices moving forward when you're making your next purchase. So let's talk about some of the products that you offer.
So as a broker, we have basically everything from VA to FHA, conventional, jumbo, what used to be called, what did they used to call it? Subprime, they now call it non-QM. It's not as nasty as the old subprime product, but we have pretty much anything out there available, from single wide manufactured homes to log cabins to regular SFRs, 4-unit properties. All of that stuff is available to us, and mainly because, again, I have access to 200 and something lenders in the country. And the 3 or 4 lenders that most brokers align themselves with may not do everything, but I know this company here will do a single wide manufactured home. This company here will do a double wide manufactured home pre-1976. All those little quirky things that come up, we have people in our bullpen that we can go to and get that done. Now, the rate may not be amazing because they're financing a pink unicorn, but we have the ability to get it done.
Got it. Got it. And what about for our investor clients? What are you able to do for them?
That is a great question. And there's a lot. There are investment loans that no income is required. No assets are required as long as we can show the property services. Now, these people have to have really good credit and they're going to have a decent down payment. But those type of products for investors that are even, dare I say, your fix and flippers, or there's all sorts of unique stuff that's out there and available in the broker world that you may not necessarily find in the banker world. If you do find it in the banker world, it's because they have a hard money lender that's willing to do this stuff. Whereas what we have are financial institutions, true banks that are willing to finance particular type of investment products. And they know that it's going to be a short-term transaction or if it's going to be a long-term transaction. The other nice thing is I have a full array of commercial products available to me also. Whereas most bankers, you walk in and they're not going to want to touch any type of commercial, like a 6-unit apartment or a 10-unit apartment, where we as brokers have the ability to do those transactions also.
Okay. So this is the part of the conversation that really gets me excited, because there are a lot of individuals who are probably going to be listening to this who they maybe are only aware of a hard money loan, or some of those more typical financing options for investment properties. But there are some really, really cool things that can be done, and you have a lot of those resources available to you to help those clients.
Yeah, that's correct. And the broker world is especially out here in the West Coast, is a very tight knit community, and we all know each other very well, and we refer back and forth. There's several brokers here in Tucson that they know I do X really well, and I know they do Y really well. And so if it's just something that doesn't fit our wheelhouse, we know somebody else that's what their expertise is, or they're much better at it than we are, and we have no problem referring it across to them. I think that's another part that's unique about the broker world. If the responsible individual, myself, I'm the owner of my company, refers a loan to the responsible individual of another broker, we can actually compensate each other after the transaction closes. So I think that what does encourage us to work together as a network, that if I don't have something available, but I know they do, that I can put it over to them and still know that I'm going to get some level of compensation for working on the transaction. Plus, I get to stay involved. So if you called me and I'm like, hey, you know what, I can't do it, but Bob over here can, I'm still involved the entire time.
Yeah, I love that. Even as a real estate agent, I do the same thing with other agents. If there's a situation, maybe it is, an area that I don't specialize in, there is that reciprocation, that referral relationship where you start to get to know who are trusted people in your industry. And I think we all, as professionals, we want to work with people who are credible, who we trust, and who are going to be a positive reflection back towards us for giving that referral. So I certainly am not going to send you business, if I think you're going to drop the ball. Right? But if I know that you're a straight shooter and I know that you're going to take great care of these clients, then I'm happy to refer business to you because that makes me look good. So what we're talking about here is really, like you said, it's a network. And that's powerful because a lot of times you don't see that in certain industries.
And it's nice to be able to have access to those individuals. And we function in a part of the industry that's known as wholesale mortgage lending. And these wholesale lenders have huge resources for us, and they have account executives, that knowledgeable person on the end of the phone that we can contact immediately. I need help with this, or I don't understand this, or I have this borrower and I'm not quite sure what to do with them. So we have a lot of resources available to us to get more unique and more complex transactions done than the world of mortgage banking.
Love it. Love it. All right. So I'm going to pivot just a little bit because there was a topic that we wanted to make sure that we touched on. And I think it's a valuable one. The conversation in the news with the housing prices and the housing market and all of the things that are going on is now really looking at sellers. Like I mentioned to you before we started this, the media is saying the sellers are the ones that are rejecting like VA loans, for instance. And what I had mentioned to you is, oftentimes it is the agent that is planting those seeds, right? Because they don't understand. They don't understand that a VA loan is a solid financing option, and that the transaction can get from point A to point B, in a pretty straightforward manner. So can you talk to us about what you're seeing and from your perspective on the lending side? Is it true or is it BS?
So VA is a great financing tool. And I love numbers, I love percentages, I love statistics. I think one of the reasons that sellers and agents have an issue with VA is old VA was a pain in the rear end. That's been gone for 10, 15 years or longer. The problem is only 3 to 5% of the transactions in Arizona are VA financing. In Arizona, Maricopa County, Pinal County, and Pima County are 3 of the top 5 counties in the country for VA financing. So you can imagine how bad this might be in other areas where you might see one VA offer a year as an agent. The comments I've heard are VA appraisals are coming in low. Well, appraisals across the country are coming in low because we're offering 50, 60, 80, 100,000 over asking price. But if you tell me your conventional appraisals are coming in, you're crazy. They're not. The one beautiful thing about VA appraisals is when we order that VA appraisal through the VA, that appraiser has 10 calendar days to get us the appraisal back. Right now in Pima County, you're lucky to get an appraisal back in 30 days on a conventional loan. Which would you rather have as a listing agent, as a seller? Knowing within 10 days that, this appraisal came in short and we got to negotiate, or you're 30 days into this transaction and you're waiting on your money to buy another house, and all of a sudden the buyer throws their hands up and says, oh no, I'm not buying this because it came in $20,000 short. Well, you're 30 days in. On a VA, you're only going to be 10 days in and you're going to know what that thing appraises for. Conventional. Everything about conventional underwriting is a gray area. This is very subjective from the underwriter. And I always joke, your underwriting approval may be based on if the underwriter got their Wheaties this morning or not before they left the house. Are they hangry or did they get something good to eat before they sat down at their desk? When you're looking at a conventional transaction, VA, there is no gray area. You either as a veteran, you qualify or you don't. There is no magical thing that's going to come up 25 days into the transaction that says all of a sudden this veteran doesn't qualify, unless you're dealing with a loan officer who doesn't understand VA. And that's very, very key to VA, is having somebody that understands it, is a practitioner and knows how to use the VA product correctly. But if you're dealing with somebody that knows how to use VA correctly, when you get that appraisal back in that first 10 days, that's a solid done deal. There's nothing that's going to come up outside of loss of job or something tragic happens that's going to keep that thing from closing. Another thing that I love about VA, and I'm going to use an example of a borrower I have up in Phoenix right now. They're buying a $2 million property in Scottsdale on a VA transaction. They're getting a rate of 2.5%. They're only having to put down $147,000. There is nowhere that you can go get a $1.8 million loan at a rate of 2.5, 2.375, 2.25. Doesn't exist. And it's going to close on time. So something else where VA is really useful is you get over that conforming loan limit, or you're getting really close to that conforming loan limit. That is going to be a much more solid offer than you're ever going to get on the conventional side. So I've talked to multiple realtors like, oh yeah, we don't like VA. VA appraisal is going to come in low. The borrowers are hard to qualify, so on and so forth. And none of that is the case anymore. It has such the wrong stigma right now of what it used to be 15, 20 years ago and what it really is today. If they've had a bad experience as a seller or as an agent with VA, it's because they had a loan officer or a company that doesn't understand VA and how VA works. It doesn't have anything to do with the program itself. We as a company have very good connections with the Veterans Administration up in Phoenix, where I've even gone over underwriters' heads directly to VA in Phoenix and say, will you look at this real quick? And they look at it like, nope, yeah, you're right. And go back and tell the underwriter that they need to go ahead and do the transaction. So a lot of it hinges on the person helping with the transaction that they're doing, but VA is not the VA that it used to be.
Awesome. So thank you for dispelling those myths and misconceptions. So I want to give you an opportunity to tell our listeners a little bit about your company and your website and how they can get in contact with you.
So the website is inspiredlifemortgage.com. It's very much based on education. It's not big flashy buttons, click here, get approved today. We have the best rates, we have the best fees. We're very much about educating not only buyers, but sellers, real estate agents, title companies. We have a collective 90 years worth of experience between the three of us that originate, and over 100 years worth of experience between the six of us that work here. And so we know or have come across things that other people haven't, or haven't been in the industry long enough to ever have come across it. So we like to do everything based on an education, as opposed to just, I got the best rate, best fee, and nobody can beat me.
Love it. All right. So when we're wrapping up an episode, I always ask my guests to leave us with some final thoughts, something that just, you're like, oh, I just got to say it. I got to share this before we end. So I'm going to give you like 2 seconds to think of something really amazing. Any final parting thoughts that you have for us today?
I love our taglines, and they're not taglines, it's what we believe in. It's, Inspired Life Mortgage, inspiring responsible homeownership. The other one is purchase with a plan, and the other is refi with a purpose. And that's truly what we believe in. If you're going to go make the most expensive transaction in your life, and everybody thinks it's buying the house, it ain't buying the house. It's the mortgage you choose, because that mortgage is going to cost you 3 times what that house does. You need to have a plan. You need to understand what you're getting into, educate yourself, and you got to shop.
Awesome. Awesome. Wonderful conversation. I think we touched on a few really, really, really key things. And I think you did a fantastic job of demystifying some of the common questions and misunderstandings that people have. So I want to thank you so much, Jonathan, for being with us. And of course, I want to thank all of our listeners for tuning in, and encourage everybody to subscribe, because we have more fantastic guests and awesome conversations.